So if you want to see what happened, you'll have to find it on the internet somewhere, because it'll be on there. Anyway, what this is about, I call it cherry picking in real time using market geometry. And the reason I call it that is because in the past I've done a presentation on what I call hidden geometry, and I gave you guys an introduction to some of the geometric formations that are out there and things that are used with geometry. And I've done other things where we typically just did what I call cherry picking on daily data and using some kind, and I get asked, well, gee, how do you pick those things, and how do you pick those points to draw the lines from? You may find that answer in here in some way, and we don't even have Ralph today. Oh boy, I'm not going to be asked crazy questions. So, so you'll get, this is going to be very different. What we're going to do is we're going to take a look at a technique that was introduced to the public in the 1980s in an article in this magazine. Okay? And it was introduced to the public in the 1980s in that magazine, and then we're going to take a look at the techniques used then, and we're going to see the techniques used in the last 2 weeks, this month. You know, something that was introduced back then. Does it still work today? Does it work right now? And we'll show you. Okay? So, without any further ado, let me see what I'm doing here. Does that work? Huh. Okay. Let's see if this works. No. Well, I'm doing down arrow, not getting anywhere.
Page down.
Space bar?
You're in edit mode.
I'm in edit mode.
Editing mode.
God.
Just click on geometry. There you go.
Geometry.
It's okay.
Market geometry. Now what you're going to see are some examples of the results using this technology. You're going to see, and using this technology, over time, you're going to see what techniques worked over 30 years ago. And you're going to see this, if the same, that you can see effectively see that the same technology still works today. Matter of fact, works this month. Okay. Now, this is what a cherry picker's account looks like. This was a snapshot of one of my accounts that I mailed over to Sam this week. And if you just take a look over here in this column here, you see unrealized P&L. And you see each one, it averages about $1,000. These were trades I put on that day. And that was, I believe that was Wednesday or Thursday of this week. And so maybe there's money to be made in this stuff. Now, so the question might be, what was used to get these profits? Well, the answer is well, here's an actual trade. As you can see, there was a position on, short position in the bonds, which went from here way down quite a bit on that day, and we wound up getting out and taking profits. Simply as a result of looking at this chart here, which has just these simple lines drawn in, that's all that was really used for the most part. So using this here and then having the right process for understanding when to buy, when to sell is what was used. And we'll get into a little more of that.
Ron?
Yeah.
Just to I guess to interrupt you basically.
Good.
What would be a different name to this than market geometry? Can I say support resistance?
No.
Okay, so is there any other name? I don't like
Well,
that.
call it Ron's shit. I don't know. I mean,
so it's not support resistance.
It's not support resistance.
Okay.
No. This is not support resistance. This is I don't know, Ron shit, Andrew's stuff, Babson stuff,
Whatever. Okay.
whatever. Let me just make sure this is still working. Yeah, it's pitchfork, it's trend lines. Now, this was a chart we send out, and one of the things I like to do with a certain select, yes, sir.
Is this fully automated? Does all the
Absolutely not. If you want something fully automated using this stuff, talk to Ralph.
Right.
Not that you'll get anywhere, but you can talk to him.
Who's that?
He used to be here.
Yeah, he's usually here. He's a Swedish guy. He's very meticulous about, all kinds of things. He spent a good 20 minutes with me asking how you draw a median line. So, good for him. So anyway, this was a chart we sent out on Thursday. And on Thursday, as you may remember, the market went down on the opening, right? And this was Thursday of this week, and it just went down to a trend line. And what we do is we have a technique we like to use called second chance buy. And what it simply says is that once we're in a trade, sometimes we have a second chance. And so what happened was the market went up and then it went down again. And a lot of people got kicked out or whatever. I've been talking to some people who made some trades this week, and they got kicked out on their stops and stuff. And okay, well, I didn't get kicked out of my stops. I stayed long. And when it went down below this line here, on this chart here we sent out to people so they'd know when to look for this second chance. And this was the second chance buy zone, and wound up getting a nice long position. And we'll show you what happened and where we are now, and we'll answer the question that we always have in this group: what about Monday? Okay, and we'll answer that towards the end. Okay, so one of the things we have are these second chance buy things, and okay, so this was it, and just using this chart here gave me the information that I needed. Now, what you'll see now is that what works today is pretty much what worked 20, 30 years ago. So there's really no need for all this optimization stuff that you guys like to do with your automation and TradeStation. See, from my point of view, the problem with some of these systems like Jim's, which does 10,000% a year or whatever it does, which is a wonderful system, is that you got to take every punch, whether you enjoy it or not. Okay? Where what I'm doing is, as you'll see, it's cherry picking, but I do it in real time. Okay? I can do it historically on charts with 20/20 hindsight. I can see all this stuff, but I can also do it in real time. Okay? So what we're going to do is we're going to take a look at the past, and we're going to look at the article which was called A Christmas Story. It was September 15th, 1984, and time was getting short. Usually by the middle of September, all the raw materials and supplies had been purchased, and over 80% of the toys assembled. This year, Santa knew he was in deep trouble. He needed $1 million and only had $100,000. He looked at his production schedule and surmised that somehow he needed to make all the toys needed for Christmas if he had enough cash by November 10th. So as he was going through his mail, he noticed that there was an investment seminar in Los Angeles the next day. Heck. So he got into his sleigh and took off for LA. Now Robert Prechter, seeing that Santa at the door, instructed the ticker takers to let him in at no charge, telling him that Santa was his personal guest. Robert took Santa to the dressing rooms where he met all the great advisors, including Larry Williams, who, by the way, in the 1980s in track performance was up 11,000% during 1 year. So what you're going to see here, 1,000%, small change. So Santa told them of his dilemma. They all shook their heads and told him they couldn't do it, making 1,000% in a month. Now, one of them made a joking comment that there was only one man who even thought that was possible. And Santa asked who that was, and the reply was Professor Alan Andrews in Florida. Now, Santa knew that as a man believeth, he shall conceiveth, and off he went on his sleigh to see Dr. Andrews in Florida. Dr. Andrews welcomed him with open arms and offered him a course for $1,500. Hey. Santa looked at the 60 poorly copied sheets of paper, called the Andrews course, and shook his head. And then the professor took out a list of his students that were also brokers. And Santa told him he bought Rudolph through a broker, and he swore he would never deal with brokers again. So Santa went on to say that there must be a bright student that the professor taught that could perhaps do it. And all of a sudden there was a gleam in the professor's eyes, and he gave Santa the name and address of the student who used computers. Now mind you, this was written in the 80s. People didn't really use computers that much. He used computers to test the professor's methods. So across America, reindeer and all, Santa flew to see the student of Professor Andrews in San Diego. After a gracious welcome, Santa told the student about his need for $1 million. And in the futures market, 100% in less than a month was quite a challenge, the student told him. Now, seeing it as a challenge rather than as a problem, Santa really liked that attitude. So the student took Santa's $100,000 and went to see a friend at Merrill Lynch, where he was able to set up an account for Santa immediately with no commissions charged. After all, they wanted the publicity of having Santa's account. Now, so time went on, and on September 25th, Santa received a statement in the mail informing him that he had sold 30 December T-bonds at $68.24. Now, let me see, where are we? Here we go. In the mail, Santa found a letter from the student. It contained two charts, labeled Figure 1 and Figure 2. The explanation with the charts said, I put the order in at the intersection of the MLH, which is a parallel line to the middle line, and the 2P. Let me see, where was it? Lines. Figure 1 shows 4 pivots going up to a P5. So 1, 2, 3, 4, 5, what would be there, which was another good signal. Figure 2 shows, there we go, that prices turned where we sold, the student wrote in his letter, and there was a number two, what he called a number 2 line, or a 2P line at that intersect. And so the student wound up going short right up there for Santa. Now Santa was puzzled at the idea of selling bonds that he didn't own in order to make his $1 million, but time went on, and on October 9th, Santa received a statement from Merrill Lynch informing him that he was now long 50 T-bonds at a price of $66.17. He noticed that his account balance had grown to $166,562.50. He didn't understand this buying and selling of bonds. He looked through his mail and found a letter from the student which had Figure 2 and Figure 3 in it. And the student wrote, the intersection, let's see what, okay. The student wrote, we bought the bonds just above the intersection of 2 course lines. Let's see where they were. There we go. The median line and the 2P line on Figure 3. Since 5 pivots were made, as you can see here, since 5 pivots were made in Figure 1, an ADC correction, as in Elliott wave, was probable. Time went on, and Santa received more mail, finally, on October 28th. And he showed him that he was now short 120 T-bonds at $77.13. And that his account had now grown to $62.50. In the mail was Figure 4 and an explanation that said, after 5 pivots up. Remember, we've heard that before? 5 pivots up, price turned at the intersection of the median line and a warning line, which was up here. It was a good place to sell, the student wrote. While Santa agreed, he wasn't quite sure if the student was going to be able to meet his $1 million deadline by November 10th. A few days went by, it was Halloween, and all the elves were in costume, and Santa received more good news in the mail. A notice from Merrill Lynch that he was now long 190 T-bonds at 69.18, and his account balance had grown to $625,312.50. He also found a letter from his student with two charts labeled Figure 5 and Figure 6, with an explanation that said, when prices go through a reaction line, and this here is a reaction line, okay, and a reaction line is measured, you draw what's called a center line, and you find the action point, and you flip over the distance over there, and that's your reaction point. He also found, there we go, when prices go to a reaction line to make a pivot, they often come back to it. I put your order to buy in near the intersection of the reaction line in Figure 5 and the ML in Figure 6. Let's see where that median line was. There we go. Right down there. Okay. Santa didn't understand a thing about pivots and all these strange lines. He did understand that Merrill Lynch wouldn't send him statements like these if they weren't correct. Finally, on November 9th, he received notification from Merrill Lynch that his account had been closed and he could pick up his check for $1,070,625. He was very happy that he met his deadline. He called the Merrill Lynch office where they had his account and arranged to pick up his check. The next day, he went through the rest of the mail and found a letter from the student. It included two charts, Figure 7 and Figure 8, and a note that said, I closed out your long bond position at 71.29 because prices were not making the ML, the median line, and clinging to the median line parallel. Near the intersection of the MLH and the reaction line, I sold. On November 10th, finally, Santa went to the Merrill Lynch office. In exchange for not charging him commissions, he had his picture taken with the bull. And after all the fanfare, he went across the street to the office of the student who helped him out. As he walked in, Santa noticed the student was very sad. And Santa asked him why. And the student answered, the professor has taught me well, as you can see by the results you received. But he is now over 90 years old, and I am to teach his course. I can teach people to count pivots and draw lines, but how do I give them the confidence and the belief? Santa answered, tell them what happened to me and show them the charts. Okay, well, I just did that. So let's go a little further. Once again, we mentioned the concept of action-reaction lines, and that's really simple. We've covered that before here. This is a center line, and one of the things we like to see in a center line is there be multiple pivots on it, and you simply take an action point, and like Sam says, it's kind of like support and resistance, but not really. And so your reaction line is over here, and this is where quite often you would have a counter move starting. Okay? Now let's move on to advanced analytics and predicting future behavior of groups, which is really what I consider this. I don't look at this as finding support and resistance. I'm trained as a shrink, and so I'm looking at this at behavior of groups. Anytime you have a market, the S&P or whatever stock you're trading, you've got a group of people trading it. So, and analytics is this discovery, interpretation, and communication of meaningful patterns in data. It also entails applying data patterns toward effective decision making. In other words, analytics can be understood as the connective tissue between data and effective decision making. So, and there are patterns in the data. Price action provides us a meaningful source of data concerning the actions of participants in a specific market. The participants are groups of people. When in groups, people behavior is viewed as group behavior, which is often predictable. Predictable group behavior is discoverable through pattern recognition. You use it every day. You already predict the future with pattern recognition. by looking at utensils, for example. You know, what's for breakfast? You see this here? You know there's going to be a cereal, more than likely. What's for lunch? Soup and salad here, because you've got kind of a spork and a spoon there. What's for dinner? Right there, you can see that more than likely crab is going to be served, not steak and potatoes. So, and what's for dinner? Soup? Not likely, because all you see is a knife and fork. So this is how we use pattern recognition in our everyday life. Now, I use something called a pitchfork, which is used to find the slope of the move. That is the relevance of the pitchfork. We take low, high, low, and we take that midpoint from there to there, which is real easy to calculate, because effectively you take this value here, this value down here, you subtract the lower one from the upper one, and you'll get this value here, and you just draw a line from here through it, and there you get the slope. And the slope from the pitchfork is designed, or the pitchfork there, the middle line, also known as the median line, is designed to give you a pretty good idea of what kind of a slope you're going to have. This can be helpful to me in terms of seeing when I'm going to have a consolidation period. Is it going to be real nasty or something, or is it going to be a nice sloping market? Now the pitchfork has a middle line, known as the median line, and as it says down here that you can barely see, in a bull market, the middle line is a good place to buy in many cases. This is an ES contract, and this happened, a few months back. Prices went down to the median line, touched, and reversed. In a bull market, the middle, median line, may be a good place to buy, like I just said. Here we have a down move in the ES, once again in the December ES a while back, and you can see went right down to it and reversed. So keep an eye on that if you're trading the markets. Now, a reliable median line, you have to find reliable ones, and that's a little different. A reliable median line often has multiple pivots on it. So let's take a look at this. As this line went down, okay, as the market here went down, we drew our median line, and we see pivot, 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 and then finally a pivot down here. So, so here, well, 1, 2, 3, 4, 5 pivots along the way. So we can consider this more than likely to be a reliable median line. And if this calls the turn, hey, that's kind of useful, right? Remember, like I said, a reliable median line often has multiple pivots on it. So seeing this much data here, this was a cotton chart recently. Take the high here, high, high, high. Yep, this is probably going to be a reliable median line, so price is going to try to make a stab at going down. Let's see what happened. Yep, sure enough, had to use different points for drawing the next median line, but sure enough, price did go down, and to the new median line down here, we wound up going long according to this here, you can see. And when we drew the next median line, it was important to us to validate it, and remember, reliable median lines often have multiple pivots on them. So we can see a low pivot, low pivot, low pivot. And here's another low pivot as we drew this median line. That was forecasted to be, well, hey, look, prices might go up here. Let's see if there's a reliable median line that gives us a nice slope of where the move is likely to be. After price makes it to the median line, draw the next pitchfork and check for multiple pivots. So we can see here, prices went up, up, up. You have some pivots along the way. And if you draw the next median line, it would be a downsloping one. Let's take a look. Okay, so after prices make it to the median line, draw the next pitchfork and check for multiple. Here we have multiple pivots, high pivot along the way, and coming down to make a third pivot. Okay. Now remember that you can use this stuff here kind of like for support and resistance, but it's very different. So once again here, after price makes it to the median line, draw the next pitchfork and check for multiple pivots. So we can see here, we take our high, low, high, draw our median line, and we can see I have a pivot here, pivot here, pivot here, and pivot finally down here. So we have about 5 pivots along this line here. That's a nice number. And price did reverse, and if we draw a new median line, we see we have a low pivot, high pivot, and price went up and made it to that next median line. Good old Professor Andrews suggested that prices make it to the median line 80% of the time. Lowering risk. Janish Analytics has found a number of patterns of group behavior that occur regularly in price charts. Price charts are used because of the availability of accurate data over the last 50 years in various time frames. The price charts used have bars that are in time units between 1 minute and 1 month in size. Utilizing a number of time bars, patterns are found, and after the recognizable pattern is considered in place, it is utilized as a setup for the reversal of price. The examples shown today are a limited number of the reversal patterns that have been discovered. There are many more that are covered in expanded course videos. After a reversal is found, a new trend has been determined. It is possible to take the smaller swings with the trend at lower risk on each trade. So you might want to look at some data from weekly or monthly bars and then work it down to much smaller size bar, maybe hourly or something. It is important to keep in mind that the long-term projection of each entry and stay with the trend to lower the risk. Here's an actual example of a trade in real time. See here, okay, want to go long here. This is cotton. Price went down to the median line. We have a nice little median line trend to the upside. That's a multiple pivot line. And wound up being long here. Let's see what actually happened. Sure enough, we can see price went up nicely. And by the way, this on Friday it was up around here somewhere. Okay, and this is an example on hourly bars. Price moves up to a reaction line. We can see here we have all these nice little pivots along the way. 1, 2, 3, 4, 5 on a line. And what does price do? Goes right up to that reaction line in the cotton and then did a reversal for a little while. Okay. Here's long again, example on an hourly chart. So on the other chart here, we wanted showing that short over here. And so we go down to the median line area to the lower parallel and up again on an hourly chart. This shows the long position. Rather than making high-risk trades using daily charts, intraday charts help in narrowing down the entry point. This, for example, is a week chart, and as you can see, we wound up being short here, and this is, price had gone up to the median line. We wound up going short in the wheat. And this was a few weeks ago. This was, I don't know, sometime earlier this month. And one of the things that happens, remember, is that we have what we call the second chance signal. I mentioned that before. So we had a sell over here, and then prices went up again. And at that point, we were able to let our people know that we have a second chance signal if it goes up here. And sure enough, it did. And nice second chance to get in on the short side, and down we go. And so what did this is an hourly chart that you see in front of you there. So what did they do afterwards? Well, they went down to about there. Okay? So there was quite a bit of profit in that. Now, okay, one of the first things I mentioned was the second chance buy on Thursday in the ES, right? And so remember, price went down on Thursday in the morning, and that was a wonderful second chance buy down here in this area. And we can see we had a nice 2P line up here. Okay? And so as a result, we wound up buying. But on Friday, we were out after taking profits, because you can see once prices went above that second chance line, they shot up like crazy. And that was on Thursday. And then on Friday, they went a little higher. On Friday, wound up going short. Why would I go short? Wonderful market. Everybody's buying. Well, let's take a look. Oh, well, here's the bigger picture on Friday. Here was the high. Notice the multiple pivot line that we've talked about. Right there in the middle, that's your median line. So what you saw, some examples of the results using this technology. You saw techniques that worked over 30 years ago, and you saw that the same technology still works today. Merry Christmas. So your questions, please.
So you're expecting the market to go down?
Is what? Do what?
Monday question.
Monday questions? Actually, maybe. I don't know. I don't know what market's going to do. You know what the definition of an economist is? Somebody who predicts the future, usually gets it wrong, and then has very good explanations about why he was wrong.
And still gets paid.
And still gets paid.
Yeah. Ron, if I want to compare this
Uh-huh.
to a couple of other approaches,
Mhm.
how do I do that? Let's say,
I don't know.
what do you mean you don't know?
It doesn't matter to me. It's not relevant.
That's you, but we're like 50 of us here asking the question.
Okay. I know there's a lot of people here, and some of you'd like to know, and
You don't have an answer.
I don't have an answer, and nor do I want to do the research on giving you an answer. I mean, I could probably show you accounts, I could do all kinds of things, just like Jim could show his accounts and how much money he's actually made and stuff. But I
can go home and
well, I know, you
Back
always,
then.
you love to statistically validate stuff.
Right.
And I get that, and God bless you for it. But quite frankly,
you don't give a damn.
I don't give a damn.
No, but my point is that, I mean, just help me think, how can I take what you produced here
Uh-huh.
and put a value on it? Because, you know.
I'm not asking you to.
No, I am asking.
Okay, you want to put a value on it. Okay, I don't know how. You
We'd
pick.
love to see you do it and then show us.
Who's that?
Who wants to what?
Yeah, no, I mean, that's the whole idea is, you know, if I want to invest the time to do this, I need to have a method of going back.
Okay. Well,
So
okay.
you're saying just flip through
No,
the
no, no.
charts?
What I'm saying to you is, Sam, this is, you have certain goals and certain processes that are important to you.
Correct.
Go for it. You go and do what you need to do in order to validate that. I personally have absolutely no interest
Right,
in doing that.
okay.
And that's why when somebody got up here once and talked real heavily about risk on a trade, I'm fine with having low risk trades. As you can tell here, these are not real high risk trades that I'm doing. Mice nuts. But keeping your focus on the risk every time on a trade is, in my mind, is, if that's your primary focus, to me that's misplaced. You might be better off having that as your tertiary focus rather than your primary focus. And I really appreciate Jim's presentation where he says, hey, drawdown is a big deal. And that makes a huge difference, it does. And, you know, for me to keep track on intraday drawdown, all that stuff, God, it's work. Too much like work. Yes?
Are you using any pattern recognition to find these setups, or do you?
Absolutely, totally. I am using pattern recognition to find these setups. Is it in software you can buy? No. Absolutely not. There actually it is, but it's some guy down in Brazil sells it because I designed it for him and made it, and who knows what he's doing with it. But they paid me a ton of money. My son worked, you know, doing the programming on the stuff, and tons of pattern. You know, we built the pattern recognition thing for him, but I don't need it. I've been doing this stuff so long that I focus on certain things, and that's what I do. You know, so it's not. You know, I understand you want to validate it, and you're going to give that one.
No, you already told me I shouldn't.
Well, then don't.
Stick to what I know.
Yeah, absolutely. Stick to what you know. Stick to what works for you.
Okay.
That's really important. You know, and so you can get the kind of results
Yeah,
you need.
I mean, what you presenting, I think, is in line with everything else, which is pattern recognition. That's
Yeah.
moving average, Keltner channel. All of these are pattern recognition, and what I learned from what you're presenting, it does have a pullback component,
Mm-hmm.
which is, you know, you can just build that in any other system.
Sure.
You have a pullback and it has a target thing to exit and so on. So it's really a pattern recognition plus some entry and exit money management type
Yeah.
component.
Yeah, it's Andrews, when he came up with this, his whole thing was keep it really simple. Something you can do with a pencil and paper. You don't need these computers. And he would say, well, moving average, and you say it in this tone of voice. Moving average, that's a thing where you gotta add up all the numbers and then divide it on a daily basis. Too much work. This is a guy with a degree from MIT and Harvard at the same time.
Was he a southerner or what?
No. He was from Boston
Really?
area. Yeah.
Wow.
Yeah.
Cool.
So,
Okay.
you know, no, this is very different. This is market geometry, and it's a very different way of doing it. You know, it's for those of you that love this automated approach that he's got, and you have the underlying technology to do it. Hey, that's the way to go. What Jim has, if that's your thing. If what you're looking for is a stock here, a stock there, or other things, you know, like what recently gave a really nice buy signal is EWW, if you like stocks, and that's one that happens to be a Mexico ETF fund. But last time somebody mentioned an interesting stock that's Enphase. Mentioned it here in this group, and I looked it up, and I mean, my lines were, if you look at the time we had our last seminar, perfect, using my stuff at finding the bottom. And it's shot up beautifully since then. So, yes, sir.
In the early part of the presentation, you were talking about the patterns of the human beings behind all the trades.
Right.
And recognizing those patterns. With especially some of the larger stocks and ETFs, the majority of the trades are not being done by human beings. So would this system hold true?
Doesn't matter. Doesn't matter. Because a lot of the, like you said, a lot of the stocks and ETFs are not done by human beings. And what we're looking at, what I do a lot of work with, are the Qs, SPY, that kind of stuff. And that's all, as Sam will tell you, that's all driven by all kinds of computers.
Yeah.
Doesn't matter.
Okay.
It's just, you know, it's somehow what's in that computer program is a reflection of what happened in somebody's head. Ask Jim. It's all a reflection of what goes on in his head. You know, just, yes, sir.
What trading platform do you use?
As you saw here, there's two of them that I use. This one here shows an account in a company called IB, Interactive Brokers. Otherwise, the trading platform, their data is not real wonderful, and they're, well, it's not real wonderful to use their stuff for trading platforms. So otherwise, I like to see my charts on Thinkorswim. Which is, you know, that's all free. Except if you trade some of the New York markets, then they charge you $100 a month for the data. So, you know, this is market geometry. I mean, you can get it. Oh, in the old days, we used to get a chart on Monday and draw the lines on it. That was the old days with a ruler and stuff. And one of the criteria for knowing you had to stop in a market was when they had to change chart sizes. It was called, the criteria was called top of chart, because it would go above the chart size that you were sent every week, and suddenly everybody just said, oh, the heck with it, we're not gonna go along this one anymore. It reached the top of the chart, and it worked a lot. It was amazing. Yes?
Are you drawing those lines manually, or there are some studies that are already built in into Thinkorswim?
I draw every one of those lines manually. There are, like I said, there is software out there that I wound up developing that some guy in Brazil has, that I charged him an arm and a leg for, that does all that stuff automatically. But For me, it's no big deal to just draw it all manually. Anybody can do it. I mean, it's really simple.
And will you share the slides or the slides that you presented? Are they going to be shared or?
Oh, I'll put them. Well, you can see this right now on YouTube, on the website. You click on that. If you don't know how to do that, no problem. Just Google Santa and the Millennial Elves. Okay, you'll see a picture of my sons when they were much younger on the front, and then it'll go into the Christmas story with all the slides and all that other stuff.
Thank you.
Okay? So it's all out there. And there's so many people out there that will teach you how to draw median lines and all that kind of stuff. And I don't know how many of them actually make any money, but there's a few of us. So, and what I like to do is do that second chance thing. Yeah.
What's the lowest time frame you trade?
Probably an hour or so. That's the lowest I look at. You know, I mean, I may look at 5 or 15-minute charts, but an hour is good. And that's what I'm looking at. And when I'm looking at an hour, I'm also looking at higher time frames, maybe a day or a week, to get an idea of where we're going or what's going on in that market. Okay, just because it makes a median line or a trend line or whatever on an hourly chart does not mean I want to buy or sell it.
Do you plot your lines on multiple time frames
Sometimes.
to see if they have confluence or?
No. What I do is I'll take a look at a chart. I'll take a look at a weekly chart, see what lines I might draw there, and then I might erase them and then I might see if the same things come around the same time. But the problem is if you draw some lines on a weekly chart, they often won't be in the exact same place on a daily. So you got to draw them again. And the same with hourly. You know, do them once on daily and you got to draw them again. Because they could be in a very different place because we're using, 3 points and that could be different parts of the day. Okay, so, play with, you've got it on TD Ameritrade. They give you a really nice paper trading platform. You can play with this all day long on paper trade and never lose a nickel.
So do you have any drawdown or stop losses or?
Sure.
Okay.
Sure. Yeah, once in a while there's losing trades. I mean, look at on here. Oh. If you look on here, you'll see, let's see, where does it say? Unrealized P&L, realized P&L, loss of $202 on a trade. That happens. You're not going to be all winners. So, but it's up to you on how quickly you press the button and on how alert you are on seeing this stuff. You've really got to be on top of it and pretty smart and know what you're doing. You've got to be a skilled craftsman, effectively. You can't just throw money at the wall and hope it makes money. Bank accounts are good for that. Just put it in there and get your 2%. Okay? So that's all I got here for you guys. Hope you enjoyed the Christmas type theme.
All right, get your pencils and protractors out. So, does anyone use a protractor anymore?
Nah.
How about a slide ruler?
Oh my God!
It seems to me that, I know that inside a trade station, I haven't done this, but I know that you can get trading systems based on trend lines. And if you can get trading systems based on trend lines, that you can actually code. I'll bet you out there somewhere there's an Andrew's pitchfork strategy trading system.
Oh, there probably is on TradeStation.
Oh, in Thinkorswim, there's a zillion
Well, there's
indicators in Thinkorswim.
Oh yeah.
There's Andrew's pitchfork drawing function that you can, draw. It'll draw it for you. You choose the pivot points, and it'll come up with the median line and reaction line. But it only works on daily charts or longer. It doesn't work on shorter term charts. Doesn't work, wouldn't work on an hourly chart even. So I don't know why, but.
No.
But
Turn this off.
that's what TradeStation does.